Hello Proponomics people, and welcome to the longer form Sunday supplement summary from the 21st of January 2024. So the article this week was entitled On the Slopes, and that was supposed to be my attempt at a bit of a joke in terms of it being that time of year when people who like to go skiing, but are we on a downward slope as a UK economy? So it was a big macro week last week, and I kicked off by focusing on, of course, all the big metrics that need discussion. And the first one is all around the labour market. So we tend to get obsessed with unemployment, and that tends to annoy me quite a lot. As you know, I like to get into the relevant detail apart from anything else. And I think the relevant detail is not just unemployment, but also how many people are what they call economically inactive. And then also, therefore, how many people are employed. So the 4.2% headline unemployment number hadn't moved, but the number of job vacancies carried on declining downwards. So the market is getting less and less tight by the month. There are fewer jobs out there for people to move to. If also you listen to the big recruiters who've been issuing profit warnings and the likes, employees aren't as keen to move jobs at the moment because there's a bit of a feeling that perhaps there's some risk in the environment, and therefore it might not be the best time to go to a new company where if you're the last person in the door, you may well be the first person out if there are suddenly job cuts and all the rest of it. And of course, we've been looking at hiring freezes in big companies for some time now, maybe 9 to 12 months, something like that. So important to note that the longer term economically inactive was down by 0.1, and therefore the employed was up by 0.1, which overall is good news. But we'd expect those most recent bits of news that have filtered through to come through in the next month's figures, not these ones that are being discussed today. So then last week also showed the release of the inflation numbers. And again, really important. Again, we focus on the headline CPI, the Consumer Prices Index, and normally that's the wrong thing to do. I prefer to focus on core because it talks about how things are moving by stripping out the particularly volatile food and energy prices apart from anything else. And core remained 5.1% for December. So obviously still above 5%, which psychologically is very awkward. Also, the 6-month core rolling was coming down really, really nicely. That jumped up a bit again because we had a 0.6% move in core inflation just for December, which saw us move back to about 3% if you extrapolate the 6-monthly figure into an annual one. And that feels more accurate right now to me. I think 3 to 4% is realistically where that's really trading in real time at the moment, but of course still above the target of 2%. Now, we haven't talked about wage price spirals for a while. Wage price growth was down to 6.5%, which is progress. It was 8.5% as recently as July last year, so it's going in the right direction. But of course, there's already these wage rises enshrined, particularly in minimum wage, at nearly 10% in April, and that's going to be a big jump, and we're going to see exactly what impact that will have on the labour market as well. But hopefully, perversely as it sounds, perhaps that will drive some productivity because some companies will be forced to get rid of some unproductive staff. Let's see what happens. Then, of course, I had to touch on retail sales, which had fallen dramatically in December, 3.2%. But what I did was put that into context and saw that actually that 3.2% is not a massive difference in terms of the year on year, went down 2.4%. That's a lot less than retail sales have been declining for the last couple of years. Retail is in trouble as a sector. It did have a huge boost in the early days of the pandemic as people couldn't spend their money on services, experiences and the likes. And we're still suffering from that over bloating in late 2020 and early 2021, to be honest. And also the sector as a rule, let's face it, physical things in general, as a long-term trend, are being replaced. That old "you will own nothing and you will be happy" kind of phrase springs to mind. So to me, this still doesn't look like a particularly recessionary environment. I also discussed the RICS house price balance. That's still printed -30, which very loosely means about 2 surveyors think the market's going downwards for every 1 surveyor that think the market is going upwards. But that's so much more positive than it's been for some time. That was the best print since September 2022, just before, of course, Liz the Lettuce was elected and that disastrous mini budget that we all faced at the back end of September 22, which we're, let's face it, still recovering from, apart from anything else. So that was a big roundup of all of the macro for the week, and a really significant week really. It's the busiest week of the month always, but no real, by zooming out, by putting everything into perspective, what I'm trying to achieve is to say there's no real significant signs of a recession. When we look at the bond yields, they're nearly 0.5% higher than they were in Christmas week, where they traded very thinly. And I did say at the time they were trading incredibly low given the interest rate environment and all the rest of it. That seems to have come back quite a lot. But the swap rates, which is where the mortgage money is actually priced, the 5-year swap has only moved about 0.15%. So I still think that the deals are out there a good value at the moment, especially some of these 5.25% no fee 5-year fixed limited company. I don't know how much better than that it's going to get, certainly at the front end of this year. The markets are all thinking there's going to be these chops in the rate cuts, but the signs for those just are still not there at the moment. On the bright side, the economy should stumble through and carry on just as it's been doing, in spite of the weakest efforts of our great leaders, in inverted commas, at the moment. But as usual, what I say every week is the same. Keep calm and carry on.